Hi friends, good morning everyone. Welcome to CAP classes. So today we are going to start a new batch with financial management subject for those students who are writing exams in May 2023 and November 2023. So this is according to new syllabus, whatever is available today, whatever is existing today. There might be changes in CA curriculum, but financial management paper is not affected. The whole syllabus, like all the chapters, all the contents, they are intact. Economics for finance and EIS, enterprise information system, they might change in the new curriculum. If you see, these two papers are not there. Having said that, this particular area, financial management, whatever we are discussing, is same. Okay, so shall we start? We'll start with the syllabus. Okay, so I want you to keep always your notebook, ICAI textbook. If ICAI has not yet sent textbooks to you, then you can use PDF from downloaded from ICAI website. But if the book is available, I prefer you to have ICAI textbook in your hand, then CAP classes textbook. So we give CAP classes study material to you. So that also you should have in hand. If at all you have received PDF from us, I suggest you that will be 100-page only, the workbook which consists of all the problems, solutions will solve in the class. So this book will have only theory and problems. Okay, so that 100 pages, you get it photocopied, you get it printed with a spiral binding, make it a book and keep it with you. And the most important thing is calculator. Most important thing is calculator. You should have a calculator always with you. And a pencil and a scale. Pencil, you need a ruler, you need a pencil. So these are the things mandatory. Okay, because we have so many calculations. If calculator is not there, you might listen to Ramayana Mahabharata what I'm speaking, but you will not be able to follow how to calculate that. And also I strongly recommend you to have a business calculator, not a scientific calculator. A business calculator, Casio, 10 digits, 12 digits, 512, whatever it is fine, but it should be a business calculator. Ensure that you are not using scientific calculators. And the worst thing is calculating in your mobile. Why calculating in mobile is the worst thing? Because of two reasons. One, mobile is not allowed in the exam hall. Second thing is the way how you calculate, the way how calculator works in mobile is different from actual calculator. Okay, you will get so many wrong answers if you do not know how to calculate. I know how to calculate in using mobile calculator also. So I'll not make a mistake. Okay, but out of 100 calculations you do in calculator, 40 will be wrong, I'm telling you, because you do not know the logic. So use only business calculator. Okay, so these are the prerequisites. These are the prerequisites. And financial management as of now is for 60 marks. Wherein remaining 40 is economics for finance, and this 60 marks will be there in future also, 50, 60 or maybe above. Okay, so now let us see the syllabus. Put the heading financial management. Okay, I see some of the students, from this side they'll write accounts, from this side they'll write costing, from middle financial management, then audit. So don't do that kind of shit in one notebook. Okay, so with the money you save in buying one notebook, you will not go to Dubai or Thailand and enjoy your life. No, you cannot. Okay, trust me, with 40 rupees, nothing will come. So better buy a separate book for each subject. Okay, so we'll start with financial management, then put serial number, one column, and chapter name. Next column, serial number 1. Obviously, serial number 1, chapter number 1 will be introduction, isn't it? So the introduction here is known as, right now, scope and objective of financial management, which is pure theory. What is this? Scope and objective of financial management. So what is the evolution of financial management? What is the necessity or purpose of financial management to a business? How it contributes or adds value? Why it is important? What are the roles of finance manager? Then what are various decisions made in managing finances of a company? Like there are 3 popular decisions like financing decisions, investing decisions, dividend decisions. you learn about all these three. And there are two aspects of financial management when you discuss about the scope. The two aspects are like, how do we mobilize money? How do we utilize money? Okay, how do we procure funds? How do we utilize funds? So these are called two dimensions or two aspects of financial management. And also how the finance as a function transformed. Just, originally it was like accounting and finance was at a functional level. If you look at management triangle, top level, middle level, functional level, accounting and finance was there in the functional level. But today in the information technology era, can you believe financial management is not in functional level, it is at strategic level. Even at CA final, what is the name of the paper you study financial management? It is SFM, right? Strategic financial management. You understand? So these finance guys are playing a very big role in driving a company. About, now business is all about valuations, business is all about stock markets, business is all about market value of a company. Okay, how do you maximize your EPS, earnings per share? How do you maximize your MPS, market price per share? So all this stuff. So all these things like, shall I go with profit maximization or shall I go with investor value maximization, which is also known as wealth maximization. So all these things we'll discuss here. Who's a shareholder? Who's a stakeholder? So how to protect the welfare of a stakeholder? How to create value? All these things we'll discuss. Okay, this is our chapter 1. Chapter 2 is types of finance. Chapter 2 is types of finance. What are various types of finance? There can be so many sources which fall under equity. Like, it could be equity shares, it could be preference shares, it could be retained earnings or reserves, it could be options. So all these things are equity. Then there can be so many things that fall under the umbrella of debt. There can be bank loans, there can be project finance, there can be bonds, there can be debentures, there can be many other types of working capital loans, packing credit, cash credit, overdrafts, blah, blah, blah. All these things are debt. So what are various ways and means, various types in which the required finance, the finance required in a business can be mobilized? How many options we have? That we'll discuss here. This chapter pure theory. Chapter 1 is theory, chapter 2 is theory. In chapter 2, you'll come to know so many new, types of finance also. For example, American depository receipts, global depository receipts, angel funding, venture capital financing, maybe bridge finance kind of stuff, seed capital assistance, euro convertible bonds. I'm sure you might have studied in your 10th class, 11th class also, because nowadays in 10th, 11th, 12th classes also, all these things were taught. All these things are taught. Okay, but still you'll at a professional level, you look at what is debt securitization, what is factoring. All these things we'll discuss in chapter 2, which is pure theory again. Then starts your practical aspects like, financial analysis, starting with ratio analysis. Again, very important and easy area. Important area, but easy area. Why it is easy? Because you have calculated ratios in many subjects in many years of your life. To begin with gross profit, net profit, debt equity ratio, current assets, current ratio, all these ratios already. But we look at some advanced ratios as well. Not only calculation of ratios, we go into the analysis aspect, and we also go into utilizing ratios and financial information. How can we construct P&L account and balance sheet? They'll give you some financial information with missing figures. Okay, so using that, we have to calculate various items of financial statements, and we have to prepare cash flow statement, we have to prepare P&L, we have to prepare balance sheet, this kind of stuff. Normally P&L, balance sheet. So this is in ratio analysis, which is actually an easy area. Then comes fourth one is cost of capital. Fourth one is cost of capital. So what is cost of capital? Tell me, what is capital? Capital is the amount invested in a business, isn't it? So can you tell me what are various types of capital? Just now we discussed in chapter 2. So can there be equity share capital? Yes. Can there be preference capital? Yes. Can there be debentures? Yes. Can there be bank loans? Yes. So obviously, excuse me, obviously when you borrow money from a bank, don't you think you need to pay interest? That is cost of capital. Sometimes when you use your own money, then also there will be cost. For example, popularly, there can be many more, there can be many more. Popularly what we do is in cost of capital, we'll see cost of equity, K represents cost, E represents equity. Cost of retained earnings, cost of debentures, any other types of costs. Okay, cost of equity we calculate, maybe I can write KP, cost of preference shares. So there are two types of cost basically. One is explicit cost, one is implicit cost, sometimes opportunity cost. Now just imagine you have 1 crore rupees in bank account HDFC and you have deposited that in a fixed deposit which gives you say 7% interest per annum. Okay. Now imagine you have withdrawn that money from this fixed deposit and you started a business. So I came to you and I asked, hey, how much of capital you employed? You said, Pavan, I invested 1 crore capital, Pavan. Wow. So for this 1 crore, how much of cost you are paying? You said, hey, good news. I'm not paying anything and my cost of capital is 0. I asked, why? You said, that is my own money. I don't need to pay interest to anyone. But don't you think there is a concept called opportunity cost? So by putting your own money in your own business, this 1 crore rupees is losing the ability of generating return on investment from alternative investment sources. So you have started a bakery with this. Say for example, this 1 crore you have put in bakery. But this 1 crore can be utilized in any manner. No, this 1 crore could have been invested in Infosys. This 1 crore could have been invested in Reliance Industries. This 1 crore, with this 1 crore, you could have purchased mutual funds. This 1 crore you could have put in fixed deposit. So by starting a bakery with this 1 crore, this investment lost its opportunity to generate return on investment. That is what we call opportunity cost. So equity shares and retained earnings have opportunity cost. So never, even by mistake, never say, I have started business with my own money, so I do not have any cost of capital. No, there is implicit cost also. You need to understand the expectation of the shareholders. So in this 4th chapter, cost of capital, you will learn how to calculate cost of capital. Then comes, okay, Pavan sir, I understand how to calculate cost of capital. Agreed. What next? Next is designing a capital structure. Designing a capital structure. Say for example, I have to do a business with 10 lakhs. I have to do a business with 10 lakhs. Can I borrow money? Yes. Can I issue bonds? Maybe if I am a company who's eligible to issue bonds, yes. Can I accept public deposits? See, let us not go into the legality. Imagine I am eligible to issue. So I can issue debentures. I can accept public deposits. I can go for a bank loan or I can issue equity shares. So I have various options. Some of them fall under umbrella equity. Some of them fall under umbrella debt. Now the question is, what will be the impact of this financing on EPS of company, on market price of share? So how much of equity should I use? How much of debt should I use? Say for example, I have option 1, 10 lakhs of equity. I have option 2, 10 lakhs of debt, which is good. Now you will come and say, Pavan sir, why 10 lakhs equity, 10 lakhs debt? Why can't be a third option with a combination of debt and equity? Perfectly fine. But if there is a combination of debt and equity, what is the component of debt? What is the component of equity? Will you go with 50% debt, 50% equity? Will you go with 70% debt, 30% equity? When you start making this combination, sky is the limit. There can be n number of alternatives. 80-20, 20-80, 15-85, 85-15, 25-75, 75-25. So what should be the ideal combination? So this is called capital structure. Should I use only equity? Should I go with only debt, or should I go with a combination? If I am going with a combination, what should be the proportion of debt and equity in total? This is called capital structure. So always we should try in the business, being the finance guys, we should try to maximize the benefits, minimize the costs, and always our mind should be, I have to do something, or I want to do something, I'm supposed to do something that maximizes the value. I'm not supposed to do something which destroys the value. Isn't it? These are financing decisions. This is called capital structure. Then comes sixth one is leverage analysis. Okay, leverage analysis is probably one of the easiest topics in the whole subject of financial management. Of course, it has a lot of relevance with the industry, but still leverage analysis is one of the easiest ways of, easiest chapters. Like, in this chapter, we will study what is the business risk, what is the risk of doing business from the point of view of operations, which is called operating risk, which is, and another component is finance risk, all these things. And we calculate certain leverages, which are the index or which are the measurements of risk. Very easy area, don't worry about it. We'll start probably with ratio analysis or leverage analysis. Then comes one of the most important areas. Whether you do CA, CWA, CS, MBA, MCOM, BCom, or any course that has connection with accounts and finance, the super most important area is investment decisions. This is also known as capital budgeting. Investment decisions is also known as capital budgeting. So basically what it is, if I want to invest money in a project, is it worth investing money in this project? If I want to purchase a fixed asset, is it worth investing money in this fixed asset? Or if I have two fixed assets, I want to buy a machine, two alternative machines are available, machine A, machine B. Which one will give me more benefits? I want to start a business. I can start a hotel business or I can start a textile outlet. I have 10 crore rupees. So shall I start business A or shall I start business B? Which business gives me more benefit? You understand? So be it a business or be it a product or be it a project or be it an asset, whether it is worth investing my money in this particular investment proposal. Okay, we use various capital budgeting techniques for that. Investments are very risky, right? Investments are very risky because they have, long term. For example, you imagine you are starting a nuclear power plant. Don't you think a nuclear power plant's life can be 100 years? Elon Musk is launching a project today. Do you think that project life is 2 years? That could be 200 years. That could be 500 years. Who knows? He's a smart guy, right? You love him or you hate him. He's a smart guy. Okay. So, off the topic, I'm deviating from financial management, I know, but do you know, people criticized him that he's a nut, he's an idiot. But do you know, now he entered into a joint venture with NASA on a mission to, find the, you call it livability or you call it the possibility of, they decided yes. It is not that they are checking the possibility whether a human being can live in Mars. No, like how you have Google Earth, you have Google Earth map, Google Maps, Google Earth, like that Google Mars is there now, Google and NASA, have developed Google Mars. Google Earth, if you go street to street, lane to lane, including door number and the car parked in front of the door, everything Google knows, everything Google tells you. Like that, there is an app for Mars now. So one guy is making Mars map, another guy is making the possibility of a human being living in Mars. So if that is the case, probably, I was dreaming of taking this class from England. Okay, now I might dream of taking this class from Jupiter or Mars also, but of course, that is far away from reality. But imagine the kind of money they are spending. How much of money? Do you think it happens with 1 rupee, 2 rupees? Now, don't you think this is the biggest challenge for them? Before making a decision, before committing money to the project, how much of analysis and evaluation is required? That we do in investment decision. Is it worth spending money on this? Is it worth spending money on this? Now, you might be reading so many things in the news, like Reliance is starting this, Adani is starting this, the Tata's is starting this. So do you think the decision happens in a day? No. Tata Motors investing money in Jaguar Land Rover. How much of due diligence, how much of investigation, how much of analysis might have happened behind the scene before making a decision? Yes, we are investing money in this project. Okay, so we'll calculate net present values, we'll calculate internal rate of return, we'll calculate payback period. So many techniques are there. Okay, so it is the investment decisions itself is an ocean. You'll definitely enjoy, calculating various things and all. So that is your chapter 7. Chapter 8. Okay, we are making investment decisions, but there is always a risk attached with this investment, no? For example, simple equation. I am investing my money in TCS company. Don't you think it has a risk? I am purchasing a non-current asset, a fixed asset for my business. Don't you think there is a risk? I am starting a restaurant. Don't you think there is a risk? So I'm thinking of buying between machine A or machine B. I choose machine A. There are certain types of risks. I choose machine B. There could be different set of risks. So 8 is risk analysis in investment decisions or capital budgeting. Risk analysis in capital budgeting. Okay, this is your 8th chapter. Okay, some students ask, Pavan sir, we subscribe to the classes, but in my folder, in my Google Drive or in my app, investment decisions are missing. Arey Baba, investment decisions and capital budgeting, it is same. Whether the chapter name is capital budgeting or investment decisions, it is same. One student who's very smart, over smart, he said, capital budgeting in old syllabus, they used to call capital budgeting. In new syllabus, they are calling investment decisions, but you have not changed the name. Did you change the videos inside? Then I said, Arey rubber manda, if you say that, in 8th chapter again they are using capital budgeting only, no? It is nothing but extension of your chapter 7. So there need not be any debate whether it is capital budgeting or investment decisions. It is same. Synonyms, capital budgeting and investment decisions. So in chapter 8 is extension of chapter 7. Okay, so in chapter 7 we look at return point of view, return benefit point of view, profit point of view, value point of view. In chapter 8 we look at the risk angle of that investment. Okay, which is actually a very interesting thing, very important thing as well. So 8th one is risk analysis in capital budgeting. The 9th one is dividend decisions. So what is a dividend? It is your return on investment you give to equity shareholder, right? Or preference shareholder also. So one person invested money in your business. One person invested money in equity shares of your business. So obviously at the end of the year or even in between, interim dividend. So Vedanta has announced yesterday 1750% interim dividend. And this is third time they are announcing in between 2 years. There can be final dividend, there can be interim dividend. Companies pay dividend, right? Isn't it? Now the question is, if you earn, say for example, 25 crores profit, how much of the 25 crores is to be distributed to shareholders in the form of dividend, and how much of that should be retained? Pavan sir, shall I pay 100%? Pay 100% today, 25 crores you earn, 25 crores you distribute, shareholders are happy. Tomorrow if you need working capital, what will you do? Will you go to Amirpet Crossroads and beg for that? Will you borrow money? No. So you should balance between making shareholder happy by paying dividend plus, making management happy by plowing back, by, by holding some of the profits in your hand, retaining some of the earnings, which is called reserves or retained earnings, which is required for your future operations. Now the question is, Pavan sir, out of 25 crores I earned or 100 rupees I earned, how much of the dividend should be declared? How much of the retained earnings are to be? How much of the earnings are to be retained? Is there a theory for that? Is there a calculation for that? If I declare a dividend, what happens? If I do not declare a dividend, what happens? What will be the impact of dividend on my company value? Will there be a theory like that? The answer is yes. That we will learn in dividend decisions. Okay, so we learn here what portion of dividend is to be declared. Out of earnings, what portion of dividend is to be declared? How much of the earnings are to be retained? That we'll see in 9 with the impact on market price of the share. Then comes the biggest area, working capital management. So in working capital management, it itself is a broad umbrella. Under that, there are so many subtopics. For example, you'll calculate operating cycle. What is operating cycle? How to calculate operating cycle? How to do working capital forecast, requirement of working capital, how do we calculate maximum permissible bank finance, then how do we manage our debtors, how do we manage our creditors, cash management, inventory management, cash budgets, cash management models, treasury management. Oh my God. So in working capital, again, there are so many units. Even in ICI textbook also, there are 6 units under this. Okay, look at that, 6 units. Introduction to working capital management, then treasury management, cash management, then management of inventory management, then this EOQ and all that stuff you calculated in costing, no, same. Then management of receivables, which is also known as debtors management, then management of payables, which is also known as creditors management. Then how do we finance working capital? Shall I go with overdraft? Shall I go with cash credit? Or shall I utilize my reserves towards working capital? What shall I do? In this, 1, 2 and 4, these 3 units are important from exam point of view. Inventory management already you studied, and the remaining 1, 2 parts, whatever are there, they are only theory, pure theory. Okay. The weightage of working capital management compared to earlier, maybe 10 years back or 5 years back, how much of the weightage is given to working capital in financial management in CA Inter, that has come down little, though the what do you call, the density or the volume is high, its weightage comparatively is low. Okay, but still very important area. So these are 10 chapters. What are they? Objective and scope of financial management, types of finance, ratio analysis, cost of capital, capital structure, leverage analysis, investment decisions, risk analysis, and dividend decisions, and working capital management. This all put together, is for 60 marks. Okay, this is your syllabus. This is your syllabus. And what are the prerequisites? These are the prerequisites. Okay, so normally I end a class by asking any doubts. In this class, I'll not ask any doubts because this is a syllabus. Even if you have doubt, this is the syllabus you need to study, isn't it? Okay, so we'll see you with next session.